Welcome to this month's Economic Update. I'm Sinead Rafferty, Portfolio Specialist at NAB Asset Management, and I'm joined by our Senior Economist, Bob Cuneen. Welcome, Bob.
Thanks, Sinead.
Bob, a lot to talk about in markets for October. We saw an increase in volatility, significant falls in share markets. Can you tell us what happened?
Yes, and it's still astonishing even a week after what's happened. So essentially, we had falls in global share markets of between 5% and 10%. And these are very dramatic falls. So if we're looking at the Chinese share market down about 9.6%, the NASDAQ, the American Technology Index, down 9.2%, global shares down 6.9%, Australian shares down minus 6.2%, and Europe down 5.6%. So extraordinary falls. Now there's a combination of factors involved here. There's no one singular cause. We can relate it to higher American bond yields, continuing trade tension between America and China, concerns about US inflation risks. We've had Italy's budget deficit proposals themselves, and we still have tensions or stresses in emerging markets. So all these factors combined have weighed on global share markets in October.
Tell us a bit more about what happened in Australia.
In Australia, our market fell minus 6.2%, and all the sectors actually fell, so there was nowhere to hide. Those sectors which have done well this year were particularly heavily hit. So if you're looking at information technology, down 11%, and the energy sector down 10%. So there was a broad-based selling of the Australian share market itself.
And yet, a lot of the data, particularly out of the US, has been really positive. So US unemployment now down at 3.7%. Are we finally starting to see some wage growth?
Yes, we are. And this is why essentially we've got rising American bond yields, and this is causing concern on Wall Street. So the good news for the American economy is the strong jobs growth is leading to this low unemployment rate. And because of that, American workers have more bargaining power. So they're pushing up wages, and wages growth is now above 3%. And because of that, that indicates significant inflation risks. And with that, America's central bank is going to raise interest rates. With these rising interest rates and bond yields, Wall Street is under threat.
So talking about Wall Street being under threat, we had the US midterms in the last couple of days. Can you tell us what the impact on markets might be?
Yes, this is a very interesting development. So the Democrats have taken control of the lower house, which is the House of Representatives. And this is important because they now have the capability to launch investigations into President Trump in terms of his past taxation arrangements, as well as the potential Russian collusion during the 2016 presidential election. So for President Trump, this makes this an awkward and difficult last 2 years in office. So from that perspective, investors need to be careful that President Trump will be under considerable political pressure.
Thanks for your time, Bob.
Thank you, Sinead.